Welcome back, and Jonathan Barratt of Probis Securities now joins us for his take on commodities. Jonathan, good to have you. I'll start with the crude oil prices first, and after 4 months of decline, we've started this week on a positive note, 11% on the higher side. OPEC meeting is done with, and $94 per barrel is still holding. What's your sense on the prices and demand going forward?
Manisha, good morning. Good afternoon, sorry. Look, I think we've actually got a bit of a range there for when you look at Brent crude. Obviously, the supply cuts were quite extensive, about 2 million barrels. I think the effective is really about a reduction of about 1 million barrels, but the market seems to have taken it quite supportive, and as a result of that, I think we've found an intermediate low. I do think that as oil, if it does continue to move up, then we do have those inflationary fears and interest rate movements, and then that'll squash demand. But at the moment, I think she has found a bit of a base, and wouldn't be surprised to see it sort of head to the top side, maybe looking at that US $100 a barrel basis, the Brent contract.
All right, so we are heading higher, yet higher. $100 a barrel is a possibility right now. How would you look at the winter demand? Because the focus clearly has shifted to that one. While Europe has enough gas to last them the winters, but what happens after the winters? And is it only going to be used for heating purposes? What happens to the industry, with the dearth of that? How are you looking at the next 3 or 4 months now?
Look, I think that's going to be obviously winter demand. We're still coming to the end of the hurricane season, although the hurricane season didn't, with Ian, we did see a spike, but wasn't as much as we thought. But I think as we do get into the winter months, you are 100% correct with the gas. EIA just reported that they got ample supply. In fact, builds were getting close to domestic levels or record levels, which was good. But I do think, and I always think, that when we do come into winter, we do get those extremes. That is always a worry for me. But I think we've got enough energy on hand in terms of oil. Gas, I think we're sort of being prepared. We could be prepared a little bit better, but at the moment, I think we'll limp through winter, with the gas that we have, particularly in Europe.
And with the kind of gas that we have and the prices that they're trading at, with nearly 50% of capacity for many of those smelters shut in case of many of those zinc and aluminum mining there, what's your sense? Do you see more shutdowns, more capacity closures coming in?
Well, I think that's what I would have thought. When I look at the prices of, say, aluminium and that, I would have thought that we would have seen more, but it seemed to be quite well contained. When you look at the actual price, yes, we have seen a little bit of a spike off the lows, but over the last 2 months, you've seen aluminium prices, copper prices and all that under pressure. Now, to me, that is a bit of a concern. Obviously, it is the economic side of it, which is causing prices lower. I do have a concern always that we don't have the supply of the metal once we get a bit of a turnaround. But I think whilst the market is quite happy to say that we have that recessionary fears, inflation's there, if the market quietens down, well, then we're going to not have an issue at the moment in terms of the supply of the market, supply of, say, aluminium, caused by smelters closing. But I think that turnaround picture will be quite aggressive when it does happen. But at the moment, I haven't seen it yet.
Jonathan, I was reading a report which was commissioned by International Silver Institute, which also says that silver is yet another metal that you should perhaps have in your portfolio, even by 4 to 6%. I mean, I saw this the first time, a conversation beginning on silver as a part of portfolio too. But if you were to make a commodity portfolio for the rest of this quarter now, till the end of this year now, how would you buy and sell commodities? I mean, you said you're buying crude for one. How would you stack in metals and precious metals within this?
Well, that's quite interesting. I also go back on your comment on silver. Silver, the current stocks in silver are getting very close to record lows as well. So if there is a bit of a squeeze there and there is more demand, then silver will have a little bit of a pop to the top side. Yes, it's sort of trading that area where it sort of has found a little bit of base, just with gold as well. So I think we might see a little bit of a movement. As we move into the next couple of quarters, if I were to build a book, I think I would remain to have silver. Obviously, I've got some gold in the portfolio at wrong levels, so I think I might add to that. And of course, obviously, crude. I do like the look of aluminium, but not yet have I gone into the market. But I think that should be part of the commodity portfolio.
All right, so that is what your commodity portfolio should look like. Crude, aluminum, gold and silver. Silver definitely is an addition there. Jonathan, as always, thank you so much for joining us today and making sense of all of that's happening in case of commodities. And that's all the time that we have on the show. Stay tuned. Business Lunch will take all the action forward.